Hello everyone and welcome to another training video with Forex Trading Signal. Today guys we're gonna go to learn about the unemployment indicator, and this video we're gonna go to explain the unemployment indicator in a bit detail. It's not a difficult indicator, however we're gonna go to look into it and explain the use of this indicator and combine it with the other indicator. So stay with us, please. We will start in a moment. So far we have spoken about this economy cycle several times, and we have learned about consumer price index indicator, and we have learned about the GDP, and we have explained the business cycle as well, and we have gone through all those elements one by one, and we have explained about interest rate and money supply tools. Today we're going to go to discuss the unemployment indicator in a bit detail and combine it with the GDP and the consumer price index indicator. So let's go into it. So first of all, guys, we have discussed about the business cycle, and we understood now what does the business cycle mean. And we said that if the GDP started to raise from the bottom peak to the upper peak, then we have expansion cycle, and that expansion cycle, it takes 2 quarters. And if we are on the peak now, the GDP is high. What is going to happen when the productivity increase? We said that investor will come and create a new jobs. When they create a new jobs, employment will increase, and based on that, if the employment will increase, the consumption of those employment and the household will increase, hence the inflation will start to increase. So if the inflation increases, all the good and services prices will start to increase. Hence, if the goods and services prices start to increase, then we end up by having expensive good and services, and that is why we call this inflation. So you need a lot of quantity of money to purchase the same services, and what the bank will do, the central bank will do to control the inflation. First of all, he gonna go to decrease the money supply because the money is too much in the market. That's why the goods and services is going higher prices. And then after decreasing the money supply from the market, he will use another tool by increasing interest rates. So if he increase the interest rates, then borrowers will be less, then consumption will be less. So in this time, the bank will monitor and will react to inflation. When we have expansion cycle and we see that the GDP at the highest level, bank will monitor the inflation. So you need also as a trader to monitor the GDP and see whether it's in the top, and also you need to monitor the inflation rate and see whether it's reaching above than the 2%, which is the objective of the central bank. So if you see that the CPI is going higher, then you anticipate that the central bank will decrease the money from the market and they will raise the interest rate. Then at that time, at the beginning of this time, the central bank will raise up the value of the money. So the price for the money will go up for the currency and the commodities will go down. So let's now discuss the other way around. Let's say that in the deflation cycle, we have seen the GDP is decreased to the bottom peak, and we say that the GDP is already decreased. That will result in the employment decrease. If the employment decrease, then the result is deflation because the people, they don't have money to spend. Then the prices for the goods and services will be going down because less spending. Then to control the deflation, what the central bank will do, he gonna go to increase the money supply in the market, and he gonna go to decrease the interest rate for the money. Hence, the value of the money will go down because you're going to go to increase the amount of money in the market and you have the same goods and services produced. So the money will be bigger than the goods and services, then the value of the money will go down and the value of the goods and services will go up. So in this time, when you have a deflation and decrease in the GDP, the bank will not focus on the CPI. The bank will focus on the unemployment rate. That means it's an indication for the future that the productivity will be less, then the GDP will be less, because the main factor for productivity for the GDP is the employment and the investment. So the bank will start to look into the employment data, and based on that, he will react. So now, where I can find this data of the unemployment rate. So you have the Forex Factory website. In the Forex Factory website, you can clearly see all the data around the employment, unemployment. So this is, for example, the unemployment rate, and this is the data around it. So you can see here the percentage of total workforce that is unemployed and actively seeking for employment during the previous month. So those data is very important for the central bank. However, the unemployment rate, you need to understand it's a lagging indicator, and you need to anticipate what is the central bank action and what is the central bank is going to do based on this data. So now we have finished almost like the most important three indicators for the central bank, and going forward we're going to go to talk about the leading indicator. However, on the lagging indicator, you need also to measure the amount of change in that indicator, so you can anticipate what the central bank going to do based on this indicator. So in the next video, I'm going to explain the three indicators which we have discussed in the previous video, and I am going to compile it and let you know how you can use this indicator for your trades. So next video we'll discuss about that, and we're gonna go to use this Excel sheet for the analysis, and we're gonna go to use also the websites for the analysis in the next video, and we will see how to calculate this indicator and how to anticipate what does the central bank is going to do in next step. So finally, guys, thank you for watching this video. If you like this video, please subscribe to our channel. This is Ahmed Al Azaiza of Forex Trading Signal was speaking to you. See you in next training video.